Assalamu alaikum. Welcome to video 3 IFRS 18 presentation and disclosure in financial statement. Along with IFRS S1 and 2, this is also a new standard that has been introduced. It replaced the previously IS1 standard. So in this, we are going to go through IFRS 18 replaces IS1 and it will impact every reporting entity that currently uses IFRS. It is effective for the reporting period beginning on or after 1st Jan 2027. Early application is permitted and it will be applied retrospectively. If an entity applies IFRS 18 earlier, they are required to disclose that fact in the notes. The amendments to IS 7, that is your statement of cash flow, and IS 33, that is earnings per share, as well as the revised IS 7 and IFRS 7. IS 7 also, the name has been changed, but the content remains the same. That is accounting policies, accounting estimates, and prior period error. And IFRS 7, that is the financial instrument disclosure, became effective when the entity applied IFRS 18. Now, the new categories in your statement of profit and loss. This is the main body in your IFRS 18 that you have to remember. There are 5. Your income and expenses are now classified into 5 categories: operating, investing, financing, income tax, and discontinued operation. So, let us understand these 5 categories in detail before I show you the pro forma of statement of profit and loss. Investing category. Your investing category has income and expenses from investments in associates, joint ventures, and unconsolidated subsidiaries. Let me tell you, before you reach to this stage, make sure that you watch my detailed video on IFRS 18 if you want the detailed explanation of this. It is there in my lecture 3 under my financial reporting lecture, IFRS 18. Now, but if you don't have time and if your time is short, but it's okay, you can watch this. This also will give you a brief understanding of what exactly in IFRS 18 the main things are. But yes, once again, you have to do questions where you have to categorize income and expenses in this 5 category. Now, coming back to the topic, investments in associate, joint ventures, and unconsolidated subsidiary, cash and cash equivalent, other assets that generate return individually and largely independent from the company's other resource. Examples of income and expense that are classified in investing: share of profit of associates and joint ventures using equity method, interest revenue from debt investments and dividends from equity investments, rental income and fair value gain or loss from investment properties. Now, under financing category involves only those income and expense that only arises because you are raising finance. For example, return of your cash or company's own share, debt instruments that will be settled in cash, bank loans, interest and expense, the effect of the changes in the interest rates from other liabilities, lease liability, defined benefit pension liability will also come under financing. Now, operating category, the main thing, this is from your entity's main business activity. Not classified in other categories. It is very volatile and unusual income and expense will come in the operating category. Income tax category, only one expense, that is your income tax that you will use according to IS 12 and any related foreign exchange difference. Then we have discontinued operation, the last category, all income and expense that arise from discontinued operation according to IFRS 5. Now, what are the required subtotals in your statement of profit and loss? These are the new required subtotals. Okay, there are 3. First, operating profit or loss before financing and income tax, and profit or loss. So now let us go through the pro forma. This is how your pro forma looks. Because the pro forma is too big to fit on one single screen, I have included in 2 different slides. This slide will only include all the operating income and expense and other 4 categories: investing, financing, income tax, and discontinued, and the next slide. But it is the continuation of this. Okay. So first is revenue, deduct cost of sales, get gross profit, add other operating income. Then you deduct selling expense, research and development, general and admin, goodwill impairment loss, other operating expense, and get your operating profit. This section is known as operating. All these expenses that comes after gross profit, even cost of sales, are included in your operating category. after operating profit. Okay, share of profit from associate joint venture and gain on disposal of your associates and joint ventures are your investing category. Next, then you get your second subtotal, profit before financing. And see, first you got your profit, okay, operating profit. Next, profit before financing and income tax. Then your interest expense on borrowing, lease liability, on pension liability and provision, all this interest expense are in your financing category. Then we have profit before income tax, where we deduct income tax, which is income tax category. Then profit from continuing operation. After that, one single line, loss or profit from discontinued operation. Mostly it is loss, that's why we are discontinuing it, right? So we take it, and that is your discontinued operation. And finally we get the profit, or it could be loss also. Okay, so this is the pro forma for statement of profit and loss according to IFRS 18. Now, specified main business activity. Some companies such as banks and investment property company will classify their income and expense in their operating category that other companies would classify in investing or financing. Because for bank, their main business activities were lending, loan, receiving, lending, right? Giving, borrowing to others. That is their main business activity. So for them, borrowing is not will not come under investing or financing. For them, it will come under operating. But for your exam purpose, your main business activity will not be in banks or investing. You should always take it as investing or financing category only. Okay. So this will allow such entities to report their key performance metrics within the operating section. Now, disclosures about management defined performance measures. This is relevant for SBR students, not FR students. This part, this section of IFRS 18. What is a management performance measure? An MPM is a subtotal of income and expense used in public communication outside financial statement, not listed in IFRS 18 or specifically required by any IFRS standard. Examples of MPM. Remember, you will be tested on this in your SBR. Adjusted profit or loss, adjusted operating profit, adjusted earnings before interest, tax, depreciation, amortization. They are not required under any IFRS standard, nor they are listed in IFRS 18. Okay. Examples of subtotals that are not MPS are your gross profit and profit before income tax, which are required by IFRS 18. Now, other financial and non-financial measure that are not subtotals of income and expense, and they are not therefore not MPMs also. Free cash flow, return on equity, net debt or EBITDA. EBITDA means earnings before interest, tax, depreciation, amortization. Adjusted revenue. See, these are not subtotals of your income and expense. Okay, they are not your management performance measures also. You have to remember this. And number of subscribers, customer satisfaction score. Next, MPM disclosure. It's a single note to a financial statement that includes a statement that MPM reflects the management's view of an aspect of the company's financial performance, an explanation of why that MPM is reported, an explanation of how it is calculated, a reconciliation with an IFRS defined number, a description of how company determined the income tax effect, explanation of any changes to MPM. The key point to remember is that if the measure is not a subtotal of your income and expense, or it is not used in public communication, then it is not an MPM. And therefore, the disclosure requirements for MPMs are not applicable. But if it's an MPM, if it's a subtotal of income and expense, it's an MPM, then you require disclosure. Otherwise, no disclosure is required. Enhanced requirement on aggregation and disaggregation. IFRS 18 has guided you whether information in your primary financial statements or the notes should be aggregated or disaggregated. Okay, especially when you're presenting your operating expenses. So how can you present your operating expenses? There are two ways, either by function or by nature. Okay, so if you are presenting by the nature, for example, raw material expense, employee benefit expense, or function of the expense, for example, cost of sales, companies are permitted to present some line items in the operating category by nature and others by function that they are allowed to do. Some expense they will show by nature, for example, goodwill impairment loss, and some by function. In deciding how to present the operating expense, a company will consider factors such as what line items will provide the most useful information about their main components or drivers of the profitability and industry practice. They will see what is the industry practice, how do they report their operating expense, whether by nature or function, or whether they feel if they report by nature, their users are going to get a better information or by function. So these are some factors that they will see before they present operating expense. Now, disclosure of expense by nature. A company that presents operating expense that are classified by function, okay, you have to disclose the amount for the five specified expense by nature. Remember, if you are presenting by function, you have to disclose under the note how it will be classified by nature. So the expenses that are disclosed are depreciation, amortization, employee benefits, impairment loss, reversal of impairment loss, and write down and reversal of write down of inventories. This you have to disclose because these are by nature. Because sometimes what happens when you present by function, you don't know what is the expense of depreciation by looking at the function. That depreciation expense is inside some other category or employee benefit like that. So in order to get this, you need by nature. So how will you get it? You can't present by two category. Write it in the notes. Okay. Now, thank you for watching, and I shall see you in the next video. The next video is on IS